When you see the kind of money that can be made with growing a book via acquisition or starting via acquisition, I don't know how scratch people make it, especially now with all the new tighter compensation. It's just tough.
If you have ever been interested in acquiring a book of business and growing by millions of dollars a year, this episode is for you. Courtney and I sit down with Joseph Puckett, incredible agency owner, and we're going to be discussing over the last year and a half how he went from purchasing a book of business, $14 million book of business to be exact, and how a year later, 12 months, he grew that book of business by over $4 million. He goes from start to finish. He shares the exact numbers with you, exactly what you're expected to bring to the table, his marketing strategies, how he pays his team, and more. With that being said, let's start the show. Hey, welcome to the Insurance Buzz. We are your hosts, Michael and Courtney Weaver, and we have a very special guest with us today, the owner of Joseph Puckett Consulting and agency owner, Joseph Puckett himself. What's going on, my man?
Hey, Michael, Courtney, excited to talk with you guys and your network and just share what I can today to help everybody maximize their opportunity.
Yeah, man, we're super excited. And obviously this is the first time we've ever met and talked, but I know that you've been around the industry for an extremely long amount of time. You've helped out thousands of agency owners and producers along the way. Now you are an agency owner and you're absolutely crushing it. You have been over like the last year. So what I would really like to get into is really like the last year and a half or so of your journey, and specifically with you going from, you're still a full-time trainer and coach, but now you're also full-time running an agency yourself. And so I would be curious, because I'm getting a lot of questions right now from peers across the industry that are like, hey, Michael, I'm thinking about looking at different opportunities, and these opportunities involve potentially buying books of businesses, but I don't know anything about it. Do you have any tips for me? And I'm like, well, man, I don't know a lot about it either, but you just went through that process. So I would love to know what your experience was of going through buying a book of business. What do you have to bring to the table? What are the hurdles that you're going to have to jump over? What are like the expectations or like, and I'll just leave it at that.
Yeah, well, I started at Allstate in 2009 as a scratch agency owner. I was 24 years old with no money, no experience, no clue what I was doing. Guys, how do y'all think that worked out?
It's
Not
tough.
very good.
It's tough.
Yeah, not very good. I was 24, and I just knew I was going to kill it. So a year and a half later, I met another agent, started working for him as a producer, and then an agency manager, then ran his whole operation, growing from about 10 million premium to over 40 million in premium before he sold. And when you see the kind of money that can be made with growing a book via acquisition or starting via acquisition, I don't know how scratch people make it, especially now with all the new tighter compensation. It's just tough. It's just tough. Back in the day, or all this whole time, there's been lots of different comp plans, for scratch agents to really maximize. There really isn't now. It's like, hey, this is how we pay agents based on new business. There can be some extra incentives. So buying a book to me, is the only way to go. And the bigger you can buy, the better. I've consulted agencies for the past 11, 12 years. I've worked with, like you said, thousands of agencies across the country. I've personally consulted hundreds of agency owners, worked with dozens who have bought books. I never had someone say, man, I got too much renewal revenue, right? Renewals are everything.
Yep.
And yes, they're being cut, right? All carriers, all companies are updating compensation plans, right? Some more drastically than others. And I know there's a lot of uncertainty out there. I was talking with an owner yesterday, Sunday, driving back from Tuscaloosa. I dropped my son off, my 15-year-old, at basketball camp. He's going to the University of Alabama basketball camp this week. Super excited. And I talked with this owner, and he's comparing two books, one $3 million book, one almost $7 million book. They both look almost identical in terms of retention, in terms of bundling, right? How bundled the book is, and performance. They're both somewhat growing, right? But not really, because the owners are kind of checked out. I was like, dude, there's no contest. You got to go with the bigger book. But also, there is something to be said with starting small, though. Less debt, right? Less loan payments. So I totally understand why agents might go both ways. But buying a book at Allstate, I can kind of speak on that. I've helped a lot of agents do it, and I did it myself. You definitely have to have capital, right? So the way it works at Allstate now is to buy an agency, you have to have a minimum of $100,000 of liquid capital, okay? If you're looking at buying a bigger book, it can be 150 or even 200. So for me, for example, I bought a $14 million book. I had to have $150,000 of access to liquid capital. How am I doing that, or how did I show that? I'm thankful and blessed that I've saved and invested and have some equity in my home and other investments that I have that I'm literally just borrowing against to fund all of this, and then paying it back as I get bonuses and commissions and renewals, right? So I'm coming up on my 1 year. It was July 1st last year. Bought just under 14 million. I'm going to end May. It'll be pretty darn close, if not over 18 million. I should end this year at 20 or 21 million. So growing very, very fast because I'm investing so much, but it takes money to make money. So Allstate or Farmers or other carriers that allow buy sells, or if you wanted to buy an independent, and I can talk about financing and stuff like that too, they're going to want to see that you have capital to invest in staffing and leads and marketing. But those are the metrics right now at Allstate is 100 grand minimum, but larger books need 150 or 200,000. Those aren't franchise fees. You're not paying any franchise fees or anything like that. It's just proving that you can, invest in the business to grow, and that you're not just doing what some agents have done over the years, and it's made it hard on everybody. They buy a big book and do nothing but milk it.
Yep.
It's hurt everybody, right? So that's why it's getting tougher and tougher to get approved to buy agencies. They want to make sure that you have a vested interest in getting there and writing a lot of business and actually growing, and not just sitting on the renewals. So financing, there's a lot of different lenders out there. I don't know if can I talk about specific lenders and kind of what they do? Okay.
Yeah.
So I love Wintrust, WIN Trust. They have done thousands of Allstate deals over the years, but they also do others. They do Farmers, they do independents, they do others. Wintrust is the best when it comes to Allstate deals. Teddy, oh my Lord, my dog wants to say hi. Teddy, what are you doing, man?
There we go.
In a meeting, huh?
If you are not watching
jealous.
The Buzz, you should be, because there is an adorable dog that's now on screen.
He gets jealous. Okay.
Oh, yeah.
Well, let's say so. Wintrust, they've done thousands of deals, from acquisitions to refinances to lines of credit. Y'all, capital is crucial. And, I talk with agents every day in my consulting, and we look at what their production is. We look at what their growth is. We look at what they're investing. And so many agents, their charts, because I have a business metrics dashboard that I build out for my consulting clients to track everything. Their charts are so flat / maybe trending down on production and growth and stuff. And they wonder why they're not making any money, or they're making the same money. Typically their renewal revenue and their new business revenue total is about the same. It's like neck and neck. You can barely see the difference throughout the course of the year comparing the last 3 or 4 years. Agents that invest and have the right systems and processes in place to write business and to grow and to do it the right way. My agency, we bundle at 96%. 96% of our new business is bundled. My staff literally have to ask me permission to write anything monoline. And if they ever ask to write a monoline renter's policy, they just quit. We don't write that junk. We only write good quality bundle business that sticks. So I'm tired of seeing agents just getting by and just doing enough to hit the minimum. If a carrier says, here's your goal, you need to think, how much more of that am I going to do? But y'all, it takes money to make money, and the cost of leads and marketing has skyrocketed. The quality going way down. It's super competitive. Right? Even the big carriers are buying up tons and tons of leads, so they're bidding up the cost. Your fellow agents are bidding up the cost. I'm in Texas, and it's crazy. I'm buying $200 and $250 live transfers for a phone call. It's over $200 right now with some vendors. There's lots of ways to generate business, and we can talk about leads and marketing too, and different vendors. But buying an agency, you're going to want to work with a vendor or a bank like Wintrust. Now, they can be kind of conservative though, so there are a couple different options. Capital Resources, and they'll do deals for farmers, they'll do deals for Allstate, for independents, and others. What I like about Capital Resources is they'll do up to 15 years. Most other banks will only do 10. But if an agency says, you know what, I'm okay paying a little bit more interest rate and a little bit more interest over time unless I pay it off early, which you can absolutely do. Stretching a payment from 10 years to 15 years can give a lot of breathing room.
Yeah.
And there's others. There's Wintrust. There's PPC Loan, right? PPC Loan has done hundreds and hundreds and hundreds of deals. My advice, talk to all of them. Say, hey, here's my tax returns. Here's the business metrics reports. Here's everything that's going on. Here's my, net worth, right? I literally just sent one personal financial statement to everybody. Then they want you to put it on their own letterhead. I'm like, dude, it's the same thing. Okay, fine. I'll retype it out again. But I got with 3 or 4 banks, and I got 3 offers. One told me no. Yeah. One told me no. Joseph Puckett, no. But I mean, it's just, it is what it is.
That's how it is.
So going to reach out to 2 or 3 different banks, going through the underwriting process, when you're really serious about doing it, look at your options. And of course, you could always reach out to me, shoot me an email or something, and I'll be happy to help, give you some advice. But buying a book is the quickest way to grow. That's my plan. I'm growing organically. I'll grow from 14 to 20 by the end of this year from last July. My goal is to put myself in position to be approved for an acquisition. And I have a goal of growing to $100 million over the next 10 years. Organically, I can grow to 40 or 50. To get to 100, I'm going to need to make some acquisitions. So that's a huge part of my overall growth strategy. And it just completely changes the game. Going back to, I've never had an agent say, gosh darn it, my renewal revenue is too high.
All right. You just covered a lot, and we do want to dig into this. So I would agree with you. Scratch opportunities. We were scratch agents just like you, very young, 26. It was tough. But there were incentives out there. We made money, did well. Now, I don't know of any really great scratch opportunities. Farmers has a pretty good one at like 340% commission for like the first year, 2 years, I think, for a scratch agent. But I would agree with you. Like, scratch opportunities just aren't great, which is why I'm glad we're talking about this today. The one question I do have about and I don't want to get into like super details with purchasing because you just covered a lot, but just out of curiosity, so besides having the liquid in the bank, is that liquid after the down payment that you have to make that they expect?
The carrier, at least at Allstate, they don't even know what you're buying an agency for. They shouldn't ask either, but they will. The market sales leaders will typically ask because they just want to get a feel for what agencies are going for and stuff like that. But you don't have to tell them anything. The purchase agreement is between you and the seller and or buyer, right? All you have to give to the carrier is a letter from the seller saying, I'm selling my agency to this person. That's it. That's the letter of intent, right? You work out a buy-sell agreement or an asset purchase agreement, APA, with the buyer and the seller. So Allstate, for example, just needs to see that you have access to that capital, whether it's a line of credit or money in the bank, that has to be liquid. So I literally have stocks and investments. I took a $150,000 loan against it, put it in a checking account, sent them a screenshot, then I paid the line of credit off, and then I moved it back when I needed it.
For
right?
sure.
But I just had to prove I got money, right? I could write a check if I had to. Banks, they're going to want to see that you got what the carrier is going to require, plus the down payment. Owner financing is becoming very popular. Banks are getting more and more conservative in what they'll lend. Owners are still wanting to sell for a premium. And if the book is growing and it's got good retention and good bundling, low loss ratios, so it's bonus eligible, y'all, they can still get a lot, right? People say, my book value's been cut. Not if you're growing. Yes, if with comp changes over the past several years, you sat on your hands, you didn't invest, you didn't grow. Yeah, your renewals are down, your book values have decreased. But good agencies that are growing, they still go for a premium. Guess what? A bank will not lend all that amount. So owner financing, seller financing, I did a note with my seller. That is very common, unless you want to put a lot down, or if you're getting a steal, you can do a fixer upper, flip this agency, right? You could do that. You could go and buy a struggling book that hasn't been doing well for years and turn it around and get it for a lot lower. For me, though, I want quality, right? I wanted to focus on a
Yeah,
quality book. But yeah, you got to have capital or at least access to it. And I tell people, to be careful about going into debt. But there is such a good thing as good debt if
for
you
sure.
know what you're doing,
Oh yeah.
right? And
Oh yeah.
leveraging debt. So yeah.
Let's talk about something really important right now to you in your office. Right now, expectations are all time high. Bonuses are harder to hit. Commissions are getting cut. Your team is underperforming. Sure, maybe they've been trained in the past. You might be even invested in training right now, but they're not doing it. Not only is that costing you money in the future, that's costing you money right now. But not only money, stress, anxiety, panic, all the things that do more damage to you than need to be done. And it can be fixed. That's the best thing. You don't have a process or framework right now. That's what we do at Weaver Sales Academy. We've worked with over 17,000 insurance professionals just like you across the country. It is our 8th birthday. We have a summer sizzle sale that I'm excited to share with you. Instead of $4,200, it's only $2,997. That is over a $1,200 savings. The average agency that works with us sees a 40% lift by day 90 of working with us in auto, fire, and life insurance. Not only that, if you're hiring, we're able to get brand new hires up and selling in less than 5 days for you. Make sure you click the link below, book a call with my team, and let's make sure that you crush not only your summer goals, but also Q3 and Q4 so that you don't have to worry about panicking during the holiday season, working more hours. I want you to be able to spend time with your family and friends. And most importantly, I want you to make sure that you're making the money that you deserve to make. Click the link below. Other than that, let's get back to the show. Okay.
So I want to get into when you're going into this book of business. So you acquire this book of business. It's a $14 million book. What's your plan to go, okay, because we've talked a lot about acquisition, but there's a whole group of people that are listening to this podcast right now that's not even an option. So let's talk about organic growth. What's your plan when you go into that? Say, okay, I'm going to grow 6 million. What are we investing in?
So the easiest money you're ever going to make, I don't know who I'm stealing this from, but the easiest money you're ever going to make is money you're already making. Going deep and wide into the existing book. If you're buying, now if you're starting scratch, then it's friends, family, personal network, connections, getting out, shaking hands, kissing babies, going back to lead cost. It's just crazy right now. How expensive leads are and the quality being down. Y'all, we do have to get back to the basics. We can no longer just swipe our credit card, buy $5,000 of internet leads, and write 100 items off of that. Those days are gone. Those days are gone, right? I'm spending about $300 an item that we write on marketing. So if my agency writes, now that's on paid leads. So my agency writes around 400 to 500 items a month. It's like 500 to 600,000 in premium a month because I'm in Texas, larger state. I have a goal of hitting $1 million in premium at some point in the next 12 months. So within the first 2 years, I want to be doing about $1 million a month as we continue to scale. But I'm spending around $300 per item that we write on paid leads. Thankfully, we do about 40% of our business from referrals, from customers, from requotes. Requotes are amazing. Old leads are gold leads. So if you're buying an agency or if you have one now and you can do some data mining, compliantly working those leads, right? You can't call somebody if they're on the do not call list unless you have express permission. Be careful with texting, especially if you're at Allstate. Like they do not mess around if you break text and TCPA stuff. But requotes, win backs. I love win-backs. They're our favorite type of lead because win-backs trusted us enough in the past to do business with us. Why did they leave? Price. Guess what every carrier is doing? Raising rates, tightening guidelines, increasing deductibles, non-renewing customers who's like, oh God, we got to get less exposure in this state or this area. So the grass ain't always greener on the other side for long. So I love win-backs, requotes, cross-sells, customer referrals, and just personal networking. All of that organic costs nothing, $0. But it's going to be really hard to grow millions of dollars in premium doing all that organic stuff. So that's why I open up my checkbook. I'm getting so many miles and so much cash back. It's amazing. We took a trip. Yeah, we went to New York City All of us, my family from Alabama, I got 3 kids. They're my beautiful wife. We're high school sweethearts. This is our 20th year of marriage, but we started dating 26 years ago. I used my Amex points and stuff for that whole trip to be free. Like, so yeah, man, I'm spending money, but we do have to get back to more organic. So, how did I do that? In December, I looked at my credit card statements thinking, all right, I'm going to get a free trip to New York City in February, but I can't continue to invest this much each month as I'm growing, right? I need to really be careful with that. I changed my staff's comp plan in December. My staff were making a certain percentage on new business based on tiers. It's a tiered system. And y'all, if you want my comp plan, send me an email and I'll just send it to you, or I can put it a link or something that you guys can share. But I had a simple comp plan. If you do this amount of items, you make this amount percent on all of this premium. Boom. There's now 2 tiers. Certain amount of total items from all sources, you get 2% less. So I basically cut the commission rate by 2%. If it's a paid lead. Why? You got to help me pay for the leads.
Okay.
If it's
Nice.
a free lead,
Okay.
yeah,
Yep.
free leads like requotes, win backs, cross sells. And by the way, a paid lead, once it becomes 45 days old, I now count that as free. I want people hungry and digging through stuff that are 6 weeks old, 6 months old, a year old, right? Whatever their commission scale was, I added 3%. So it's a 5% spread. So if you want to do nothing but answer $200 live transfers, $300 direct mail calls, get fed $80 data leads, yes, I am buying those. I only buy high cost, high intent search data leads. You want to work that? Cool. This is what you'll make. But if you'll help me, if you'll generate some cross sells, referrals, win backs, requotes, I'll pay you 5% more on that business. And it's
Heck
helped
yeah.
tremendously.
I like that. I like that a lot. And it's the thing I like about it is then the producer gets they choose the path, and they have clarity. And okay, sure, I don't really want to prospect. I just want to be a closer. I just want to be somebody that answers the phone. Great. So at least I know the rules to play by, which I love that approach. And you're making them basically take like a vested interest in it. Like, hey, like if I'm buying this
Absolutely.
for you, you're just going to take a little bit of a hit, so it helps. So that's good. Do you have anything to say before I dig into some of the numbers?
I love that because I talk about this a lot from a creative side of having constraints. Like more happens when you put a constraint on something, whether it's time or resource or something. So what you just did is you said, okay, my constraint is it has to be organic. I'm going to put that little parameter around it, just like I'm getting a parameter from my carrier of like, I'm going to pay you this and this. And that incentivizes somebody to start looking in a different direction. Like you're passing down your costs through them to where then they're like, oh, I understand that this costs more. So if I want to kind of like scoop up these other things and make more on my side, then I'm going to go for it. But my question here is this across the board? How is your team, like your service team and your sales team, are they all incentivized to go for this? Or is this just specifically your sales team? Or are you saying service team, having you go for the cross sells, the pivots, the referrals, all of that? What does that look like? What's
Correct.
your team dynamic there?
Yes. I'm not a huge fan of people that are really better at service selling. I'm just not a huge fan of CSRs or service team members, or sometimes agencies now call them inside sales team members, and that's fine. I want service team members who are patient, who will be on that 35-minute phone call with Mrs. Jones, who's upset about her $9 rate increase. Now it's not that low now, but you know what I'm talking about. That level of patience, that level of wanting to solve problems and nurture customer. Y'all, closers like, damn, can I get off the phone? I'm ready to go sell something, right? So I want nurturers, patient, really knowledgeable, will dig deep. But guess what? They have sales goals too. However, my service people don't quote and write anything that's new business. Now, will they do like spinning off a kid on their own policy, or if someone's moving to our state? That's like a glorified endorsement to me. It's not new business. But my service team knows that they have a goal, a minimum of 10 items a month. If they're not generating at least 10 cross-sold items a month, that they're not even having a quota right. I just want them to introduce their awesome partner, Joanna. Oh, Joanna, she's the best at homes now. I'm going to get Joanna. Hold on a second. Let me get Joanna ready. She's going to take a look at your home insurance. Boom, pass it. right? Pass it to Joanna or Brad or Alec or Casey or Mike or whatever. I just want them to sell the opportunity, right? And then let a closer who will be way better at overcoming objections, have way more time for follow up if they don't close it in one call. About 60% of our deals close in one call. The other 40% close on average within about 14 days, some 2 days later, some 6 months later, right?
Yeah.
But I track all of that. I track all of our time to close. So my service people, I pay them a scale. I pay them a bonus based on the item type. So I pay a certain amount for cars, a little bit more for homes, and then a little less for other things like motorcycles or umbrellas or whatever. And it's a scale. And again, I can send that to the more they generate, the more they make. And my CSRs like Susan, she'll generate 30 to 40 items a month. And then I've got my office manager / service manager. He'll do 20, 25 a month. And then I have another that does right at 10 every month, right? So I only have 3 CSRs right now, but they're doing like 60-ish items a month. And I'm paying them on average around $50 an item, like once it's all averaged out. I'd rather pay them. Now, man, I hope they didn't just hear that I pay about $300 an item to a paid lead vendor. I'd rather pay them 50, 60 bucks per unit, per item, not per policy, but per car, per each individual key on that key ring. I'd rather pay them 50 or 60 bucks and a lead vendor 300. And they love that they don't have to sell. No. They are serving our customers. This is a line. I'm sure I stole it from somebody. Service is sales. Sales is service. Right. And in fact, if you Google that, there's like a corny commercial of a jewelry store like saying service is sales. Sales is service. But I asked my team, what is your job? Right? How would you define your role in the lives of your customers? And typical CSRs or customer service representatives or inside sales, they'll say, I like to educate my customers. I like to help our customers. I tell them they can call me or text me anytime. I'm always here for them. Okay, I'm like, oh, that's awesome, right? But we can't just educate our customers on what they have. We have to advise them on what they need. And you love claims, right? I hate claims, but like you love claims. You love helping people navigate that through those challenges. You love rolling up your sleeves and get to work, finding ways that we can save our customers money on policy reviews and stuff like that. All that's awesome. But our job is not just to give service with a smile. AI is going to soon replace well over half of service work, like very soon, very soon. Like a customer will just be able to call us and say, hey, I'm in the line at the DMV and I need my ID card. And then the AI will be like, oh yeah, absolutely. We can do that. And then they'll just do it. Y'all, that is coming. If our service team are just really great payment processors and really good order takers, AI is going to soon replace that. And guys, that means our comp's going to change too. Why do you think the carriers are starting to cut comp and commissions? Because they're trying to get more efficient, because there's a price battle right now. There's a race to the top. I mean, dude, Progressive just passed State Farm, right? State Farm on auto. They'll never pass on property. Come on now. State Farm will have property forever. But Progressive is now just slightly above State Farm. So what are carriers doing? They're changing the way agents get, commissions on renewals and stuff like that, right? So to me, it's all just about putting all of these pieces of the puzzle together and saying, all right, company, you're telling me that there's less value in this work, that there's way more value in this work over here. Guess what, Puckett agency team? Same. Yep. Your job is not just to give service with a smile or to educate your customers. Our job, if I were to put it in one sentence, is to put ourselves in position to help our customers when they need us. Absolutely, to be there for them when they call, to help them when they need us. We got to sell them first. So everybody in my agency knows that they're in a sales role, but my CSRs don't quote and sell. They just pass the opportunity to a closer, and I pay them for those closed items.
I love it, man. I love it. And I love the old school approach you're taking there, because you do need nurturers on the phone, but they have to have the skill sets to actually drum up business, give to those individuals that actually like to have those conversations. So I love that. I want to dive back into some of the marketing dollars though, just real fast, for those that are like, holy Joseph, like, dang dude, like you went from 14 million. You just said you're going to finish your total 12 month at like roughly a growth of over a 4 million, a little bit more, which means you wrote more than that. Means you probably wrote around 6 million based off of the numbers you gave me. So And you're spending, and I just did the quick math on this. So you were spending $100,000 to $150,000 a month in marketing. I don't know if you did that every single month or not. So somewhere between $1 million and $1.8 million in lead spend to grow those numbers. I'd be curious, out of the percentage of growth that you've had of the 4 million growth, 6 million plus written, what percentage is coming from that lead spend and what percentage is coming from organic? Do you know that off the top of your head?
Oh yeah. Yeah. About 40% of our business is from free sources, the requotes, win backs, cross sells. About 60,
Okay.
some months 65% is more of the paid leads. I've averaged right at 100 a month. Last October, I did 120 and we had our best month yet. We exceeded 500 something items for the first time, like 650,000 premium or something for the first time. That was the worst P&L month I had. But with my carrier, I know how to play the game, right? I'm going to get auto renewals in 6 months. And because I'm an elite agency, I'll get enhanced commission on those autos. But even if I wasn't an elite agency, and who knows, they're probably going to cut that next year. Please don't, if you're watching this corporate. But anyways, there's still 6 month auto renewals for my state. Some of y'all might be in states where you write annual policies, but getting paid again on those cars in 6 months, then again on those cars and all the other annual policies by month 12, I'm breaking even / slightly profitable, not including bonus. At Allstate, everything. Bonus is everything. So I get 4%. Like I can tell y'all right now, within 20 grand, what my direct deposit is going to be in my checking account on February 17th, 2027. I can tell you that right now. I could write it on a napkin or a sticky note and say it, and then you can be like, hey, JP, what was your direct deposit on February 17th? It would be within a couple percent. I know exactly what I'm going to get back. So for me, it's not a risk. For me, it's not a gamble because I know I'm going to get paid back.
Yeah.
But it's because I have good people. I have amazing processes. I have a very strong sales process, just as y'all do, right? As you coach and train agencies on your sales process. I have really good lead vendors that I ride. If I have 2 or 3 bad days with a vendor, they're hearing from me. Now, not in a mean way. I'm not mean, y'all. But they ain't going to give me crap. It's like when you go to a house party and they give you the good wine. You know what I'm talking about? The good wine. Then like an hour later, it's like Walmart boxed wine. You know what I'm talking
Crappy
about?
but free,
That's what
baby.
lead vendors
Crappy
do.
but free.
Yep. Lead vendors will start giving you junk. I don't let them. I don't let them. There's a lot of power in the purse. So when I send a lead vendor an email saying, hey guys, here's our quote data, I track everything. Every single prospect that we do, I know their insurance score, how many accidents they have, how long they've been with their current carrier, what their current limits are. We have a quote log and we track everything. It takes about 4 minutes for a team member to fill out every prospect. And if a team member won't give me 4 minutes for me to pay $300 an item that they write from a paid source, they just won't get leads. Right? So I track everything. When we're doing well, hey, lead vendor, we're doing well. Here's where we're winning. Give me more of these. Or if we're not doing well, I send them my entire quote log minus customer names, to PII. I say, hey, these are the zip codes. These are the types of leads, et cetera. And I say, we need to figure this out or I can't afford your leads. Watch all of a sudden the quality go up. Right. So I manage my lead vendors almost every week, right? Just like we're managing our staff's expectations, right? We can't just keep swiping our credit card and hope and pray that we hit our goals, if that makes sense.
Oh yeah, I love this, man. So this has all been great information. I want to go into one other thing because I'm just really curious. So I love big, audacious goals. I love people that are trying to take things to the next level. I love people that are trying to literally break barriers and go through ceilings and create new floors. There's only a few agency owners I'm aware of in the entire captive space that have books of businesses of 100 million plus. And so I would be really curious. Number one, why is that your 10-year goal? And you don't have to go into every detail around it, but just high level, how are you going to do it?
So 20%, that's a number that I constantly have in my head. If I can grow 20% a year, y'all, compound interest is a beautiful thing. And I will say this, you can do whatever you want. I would not recommend an agent put all of their eggs in a basket because, man, that basket can change. A carrier can say, you know what? We're done with homes in this state for a while and non-renew them. Ask Florida agents how that felt, right? A carrier can get hit by some hurricanes or tornadoes and they can do what they did to us in 2011, 12, and 13 when it was like next to impossible to write business in Alabama, which is where I live. My agency's in Texas. I'm fortunate that I'm able to do that. I've got a whole remote team in 8 different states, but it was tough. They said squeaky clean in 5 years, 0 incidents, not even a glass claim. Our close rate plummeted. So for a couple years, it was very hard to write business. All right. So I'm all in right now because I know what I'm doing. And I know within 12 months, I'm making money and I'm building my renewals. So years 2, 3, 4, 5, I'm making a lot of money building the book to maximize bonus. Right. But 20%, if I can grow 20%, right now I'm at 18 million. I'll be right. I wish the report would have come out. I should be right at 18 million. 18 times 1.2. So next year will be year 2, 3, 4, 5, 6, 7, 8, 9, 10. If I just grow 20% a year, dude, I'm at 92 million. I can grow 2% a month.
Yep.
I'm just focused on that. Can I grow 2% a month? So I think 100 is too small. I think I'll be at 100 quicker if I'm able to make acquisitions. Correct. If they won't let me, because man, that can change. That sometimes they don't like existing agents buying books, but then they realize, wait, we had all these inexperienced people buying and they didn't know what they were doing. And then they sold 2 years later. They then say, hey, how about we let an agent that's freaking crushing it buy it? So it goes up and down. It goes up and down. Dude, I can grow up to 100 just by growing 2% a month.
That's
over the next 9 years.
That's a good breakdown, man. That's a really, really great breakdown.
Mm-hmm. I like the 2% month over month too.
And dude, rate increases. I love rate increases. Come on, man. Bring on those rate increases, right?
Free pay increases, baby. Let's go. Yeah, man.
Compound interest, right? So just like we should invest in the stock market. Well, I'm not giving you all financial advice. Just like we should invest in outside of the agency, right? Because that rug can get pulled at any time. I see investing in the agency as a really great return. I'm growing. There's a thing called termination payment. If anybody out there is ever interested in buying an all-state agency, it's called TPP, termination payment provision. I'm cool sharing all these numbers. I do. I share all these numbers with lots of people all the time. I'm investing about 50 grand a month right now. Investing. All right. I'm getting all of that back almost with the 6-month auto renewals. And then by the 12th month, I'm more than good. Then a 4% bonus on the whole book. Do that math. But if something ever didn't work out and I was like, you know what, I'm done, and I couldn't find a buyer, the carrier buys me out at a termination payment. They pay it out over 2 years and it's 1099, so it's not ideal for taxes, but it works. My TPP is going up 120 grand a month. So I'm basically investing 50, growing 120. Now, but could they change that? There's people watching this saying, JP, they could change that.
Of course.
Not likely. Not likely. The percentage that they pay. What it is the more new business you write, the more renewals you have. It's basically looking at your last year's earnings times 1.5. What was your last year's revenue times 1.5? And it's just snowballing like crazy. So that's how I'm comfortable investing that kind of money, because I'm getting it back in value. That's a guaranteed resale value to Allstate. If I ever want it out, I could say, hey, I'm out, and they got to pay me that check.
I love that, man.
Yeah.
This has been great. This has been great. Just this whole process of walking us through this, your transparency, this has been really refreshing, man. So if somebody wanted to watch you on your journey, if they wanted to connect with you maybe on social media, maybe they need some help from a one-on-one consulting standpoint, because I know you do a lot of that with agency owners, what's the best way for them to get a hold of you, Joseph?
Yeah. So I'd love to connect on Facebook and Instagram, LinkedIn. I don't really hang out on, but my handle is Joseph D. Puckett everywhere. So Facebook.com, Joseph D. Puckett, and same for Insta. My website, josephdpuckett.com. My email, simply email@josephdpuckett.com. So y'all can reach out to me. I'd be happy to help any agency that wants to grow, whether that's growing their existing agency, thinking, you know what, when he talked about those graphs of premium written and growth and commissions being flat to slightly down, I'm tired of that. I'm tired of not growing. right? I can help, or if you're looking at buying an agency, I can help. I do group training, and I do individual consulting, and that's where I get the most value, or not value, when I get the most like personal reward. When I help an agent, like there's an agent in Ohio, he might end up watching this, no names. 7 or 8 years ago, he was at 3 million. He was about to give up. He was about to say, you know what, I'm done. And I said, no, let's figure this out, right? So we turned that $3 million book into about 5 over the next 2 years. He got approved to buy an agency because he was mad that they wouldn't let him buy. I'm like, dude, you ain't growing. Like, why are you mad? Like, would you hire somebody who couldn't grow, right? Who couldn't write more than what you would need to grow? So he bought a book. He's going to pass over 25 million this year in premium. And 6 or 7 years ago, it was around 2020, it was around pandemic time, he was wanting to just get out. And now he's going from 3 million to 25 million and making insane money because he's done it the right way with good people, good processes, and all that kind of stuff. That is what I love. But I'll also say this, there's sometimes I coach somebody and I know that they can't make it. And we'll have that serious conversation. I'd rather have that serious conversation with them and say, hey, listen, let's talk about an exit. Let's try to figure out how to position you to where you can exit gracefully. But man, sometimes people just aren't in it. They're done. Their heads out of the game and they won't invest and grow. I can also help agents through that process too. I just want to do what's best for people and help people. And I'm honest, I do not pull punches. I will look at a book. The other day, I did an 8-hour consult with an agent. She's up in Maryland and just bought her book a year ago, has no clue what she's doing. And I thank God that she reached out to me. She's doing okay, but her book is losing premium, not tremendously. Her retention's sinking. She's not writing business. She's only hit her variable comp bonus 1 time out of the last 10 months or whatever. There was a couple times I had to catch myself like thinking, damn, this is bad. Right? I was like, no. It's not. You know why? Because we're going to change the next year. Like she's in it. She's in it. So like I didn't feel like telling her, hey, you can't do this. I just wish that I had the 8 hours with her a year ago.
Yeah.
Right. We just changed the trajectory of her life. But hit me up, Joseph D. Puckett, email at Joseph D. Puckett, Facebook, Instagram, whatever. Be happy to connect with you and just follow my journey. I post all kinds of stuff to my Facebook, man. Sometimes people be like, why do you share that? Right. I share how much we're writing, but also how much it costs. Right. I had an owner. He's like, your staff might see that. I was like, they better see it. I want my staff to know how much I'm spending and how much I'm investing in them. Right. So I post all kinds of stuff to my Facebook and Instagram. Follow me there.
I love it, man. This has been fantastic. Joseph, again, thank you for your transparency, honesty. This has been great.
I have 2 pages of notes. This was fantastic.
For all of those of you who tuned in today, I can guarantee your pens were smoking because I also have a full paper of notes. So if you guys enjoyed today's episode, please let us know. Whether you take one thing or whether you take multiple things away from this today, please go out and do something with it because action is your best friend. You just can't keep sitting and doing the same thing and expecting different results, man. So as always, time and attention are by far your most important assets. We appreciate you spending time with us today on The Buzz. Go out, make it great. Joseph, thank you again, my man.